Britain's banks should keep their retail operations separate from their investment banking arms to protect them and the public from another financial crisis. The Independent Commission on Banking also called for more competition between high street banks and said Lloyds should sell off hundreds of branches. In a moment, our correspondent Benjamin Cohen will ask how the consumer's experience of banking might change. And I'll be talking to the former Chancellor, Alistair Darling. But first, our economics editor, Faisal Islam, reports now on a potentially far-reaching day for the banking industry.
Open for business, an ordinary bank branch on a day that we're told could be a new dawn for Britain's banking system. This is banking as most of us know it. Tills, deposit slips, checkbooks, bagged coins, date stamps and a friendly cashier. It's a world away from the bonus-fueled toxic gambles of investment banking that caused the crisis and saw taxpayers stump up for multi-billion-pound bailouts. The plan now to ring-fence this, basically to wrap the high street arms of banks in bubble wrap to insulate basic banking and savings from high finance.
These are absolutely far-reaching reforms, and I think in the modern history of UK banking, if reforms of this kind were implemented, now that's not a question for us, that's going to be a question for government and parliament, I think these could be absolutely transformative.
That's the view of Sir John Vickers, chair of the Independent Commission on Banking. Bank shares were up this morning after it revealed what it called a combination of more moderate measures, falling short of an actual breakup of banks. Its members, including a former Barclays boss, denied the Commission had shied away from a more fundamental shake-up.
The providers of debt to the banking system, before and during the last crisis, took the view that they were going to be bailed out by governments, and they were right. And I think we want to be sure that when the next banking crisis comes, and one way or another it will come, they no longer take that view.
The theory that if the high rollers in the skyscrapers get into financial trouble, the high street can be detached and saved, and the investment bank left to go bust. Exactly what did not happen with Royal Bank of Scotland 2.5 years ago.
So banking is supposed to be about our savings being kept very safe. And this is a rather heavy door. But since the crisis, the calls have been for us to be kept safe from the banks. But all that suggests a rather different relationship between Britain and its free market banking system. That's creating tension between the banks and the Bank of England, between the Bank of England and the Treasury, and also within the coalition government.
Ultimately, it's going to be George Osborne's call how much he wants the economy to pay for a safer, more competitive banking system.
And who will pay ultimately?
Ultimately, it's us.
One price of safety is in what's known as a bank's capital. They currently have to keep 7% of the money they loan out in reserve. The Vickers Commission proposes that would go up to at least 10% for the ring-fenced British high street arms of banks, but most UK banks have that already. Yet in Switzerland, hardly a fountain of anti-bank sentiment, they're thinking of going as high as 19%. This commission presents a difficult dilemma for George Osborne, the Chancellor, whether to go for the caution of number 10 and the banks, or whether to dabble in the radicalism advocated by Mervyn King at the Bank of England, Vince Cable, the Business Secretary, and much of the public. The acid test of this, whether three big universal banks, Standard Chartered, HSBC and even Barclays, remain headquartered in Britain by the end of the year. It's up for grabs. The big banks weren't talking today, considering their response. The boss of a successful competitor welcomed the report, but confirmed the banking industry costs tend to get passed on to consumers.
I suppose there may be some cost increases that come out of this, and if people hold more capital, then there will be. But the cost of people not having trust in the banking sector is a far greater cost than a relatively small amount of increased capital.
As trust in big banks has faded since the crisis, his bank, the customer-owned cooperative bank, has seen a customer boom. Here they hope moves to increase competition, including forced sales of hundreds more Lloyds TSB branches, will be the big shake-up for customers. The big decisions here, though, are for the government.
Faisal Islam reporting.